All right, so your side hustle is taking off and that money is hitting your account. It feels amazing, right? But there's a hidden catch that can seriously shrink those profits if you're not ready for it. And that catch is taxes. Today, we're building a 5-point plan so you can keep more of your hard-earned cash. So let's just imagine this for a second. It's 2026, your gig is a massive success, and you've pulled in an extra 10 grand. That is a huge, huge win. You should absolutely be celebrating that. But, and this is a big but, that $10,000 isn't all yours. And this chart, well, it shows you exactly why. A big chunk of those earnings, we're talking anywhere from 20 to 35%, can just vanish into taxes. That could be $2,500 gone right off the top. So what's causing this massive tax bite? Well, there are two culprits working together. You've got your regular old income tax on the profit, sure. But the one that really surprises people is the second one, self-employment tax. This is the reality for anyone earning money on their own, whether you're a freelancer, a driver, or selling stuff online. And listen, for 2026, this is more important than ever. The IRS's new $600 reporting rule for platforms like PayPal, Venmo, or Stripe is in full swing. This means they can see pretty much everything. So tax planning, it's not just a good idea anymore, it's totally non-negotiable.
So the big question is, how do you flip the script? How do you go from being surprised by a giant tax bill to proactively and totally legally shrinking it down? That is exactly what we're about to break down.
Here's our game plan. It's a simple 5-point countdown. We're going to start by understanding the tax bite itself. Then we'll dive into deductions, cover some advanced strategies, talk about how to stay compliant, and then finish with the number one, most important money-saving habit you can build. Ready? Let's do this. Okay, coming in at number 5, understanding the side hustle tax bite. Look, before you can save any money, you have to know exactly what you're up against. And it all begins with that self-employment tax we just mentioned. This right here is the magic number, 15.3%. It's made of two parts, 12.4% that goes to Social Security and 2.9% from Medicare. Now, the key thing to get is that this is on top of your normal income tax. It's kind of like the price of admission for being your own boss. But hey, it's not all bad news. There is a silver lining. The tax code actually gives you a bit of a break. You get to deduct 1/2 of what you pay in self-employment tax. It's a really helpful deduction that lowers your taxable income, so you definitely don't want to forget about it. All right, next up at number 4, deduct your way to savings. This right here is where you can find the biggest and fastest savings, especially when you're starting out. We are talking about business deductions. So what the heck is a business deduction anyway? It's really simple, any expense that is both ordinary and necessary to run your side hustle. The more of these legitimate expenses you track, the lower your taxable profit gets and the less tax you pay. It's that direct. And the best part? You probably have a ton of these already. We're talking about a part of your rent or mortgage for your home office, a percentage of your internet and phone bill, any software or AI tools you pay for, new laptops, website fees, even online courses you take to get better at your craft. Let's make this super real. Just look at the home office deduction. If you use the simplified method, you can deduct $5 per square foot, up to 300 square feet. That's a quick and easy $1,500 deduction right there, which could save you hundreds of dollars in actual taxes. Okay, moving on to number 3, let's talk about some advanced strategies. And don't worry, advanced does not mean hard. Once you've got the hang of basic deductions, it's time to level up with these strategies that can make a huge difference. First up is the Qualified Business Income Deduction, or QBI. I know, it sounds super complicated, but the concept is actually pretty straightforward. For most small businesses, you basically get to just chop off 20% of your profit before your regular income tax even gets calculated. It's one of the most powerful deductions out there, for sure. Now, what if you could save on taxes today and build wealth for your future at the same time? Well, you can. By opening a retirement account like a solo 401k or a SEP IRA, every single dollar you put in is a tax deduction now, which lowers your bill while you're literally paying your future self. It's a total win-win. Coming in at number 2, stay compliant, stay calm. Saving money is awesome, but it's also awesome, avoiding penalties and stress. This is all about knowing the rules of the road so you can stay on the right side of the IRS and just relax. See? Unlike a regular job where taxes just disappear from your paycheck, when you're self-employed, you're responsible for paying them. And you do that throughout the year by making quarterly estimated tax payments on these 4 key dates. Don't let them sneak up on you. Now, you might be worried,
How do I know exactly how much to pay? Don't stress. The IRS has what they call safe harbor rules to help you avoid penalties. As long as you meet one of these two simple conditions, you're golden. It's a straightforward way to make sure you're in good standing.
And here we are, number 1, the single most important habit that makes everything else we've talked about possible. Seriously, if you only take one thing away from this whole explainer, make it this. Get this right, and you'll save money, time, and a whole lot of headaches.
The single biggest mistake almost every beginner makes is right here, mixing their business and personal finances. It's a recipe for disaster. It means you miss deductions, you get massive headaches at tax time, and you never really know if your business is actually profitable. But the fix? It's incredibly simple. This 3-step process is your golden ticket. 1. Get a separate bank account just for your hustle. 2. Use one specific debit or credit card for all business spending. And 3. Use an app to automatically track it all. That's it. It is a total game changer. And as you set up that simple system, just follow this one golden rule. Every single time you get paid, before you do anything else, move 20 to 35% of that money into a separate savings account that you label taxes. This one habit will save you from that terrifying surprise tax bill in April. So there you have it, a 5-point plan to take back control of your side hustle taxes. Look, you don't have to do everything all at once, but you do have to start somewhere. So the real question is, which one of these tips are you going to put